Hey everyone, back in the hot seat is the one and only Mark Moss. Mark, thanks for joining me. It's been a while, so I'm excited to catch up with you.
Yeah, it's been so long now since I've been on the show. So thanks for having me. And I always love talking to you. Like I said, we have a lot to talk about, but yeah, let's get into this.
All right, well, there's a lot to cover, a lot happening. We seem to be in a little bit of a September slump. They're about to cut rates. So I just want to start with maybe zooming out and getting your macro outlook. What's happening right now?
Well, I love that you said start by zooming out because that's exactly what you have to do. People will drive themselves crazy when they're too zoomed in, and so you do have to zoom out. If you're looking at your portfolio on a daily, weekly, even monthly basis, you're going to go crazy. When you're looking at every single piece of news, trying to figure out what's tradable, I think you'll drive yourself crazy. So if we zoom out, I would say things are going right as planned, right as we all think they would. And what I mean by that is since the Fed announced they were going to start tightening in November of 2021, um, people thought they would break the market. We knew at some point they're going to have to lower rates. If you understand the financial system as a debt-based monetary system, you understand it always has to expand. Now, not always in a perfect straight line. So there are peaks and valleys, but we know what's going to happen. So they went on the tightening cycle, zooming into kind of where we're at right now. They start projecting that they were going to start lowering rates or regime shift from a tightening cycle to an easing cycle. And we could start to see it in the data. And so we could start to see beginning of this year, unemployment started ticking up, inflation started cooling down. They started pivoting towards that. All right. Now, Bitcoin hasn't been moving based off of this, but we know that they were going to do this. Jerome Powell has just been trying to hold this off as long as possible. But the sort of the proverbial rock in a hard place has been tightening on him because we've started to see the cracks, as I said, unemployment, et cetera, but also other governments, other central banks around the world. So other central banks have already started easing, but there's really four major central banks, and we'll get into liquidity because that's the big driver. But when I think about it, there's really four major central banks that we want to pay attention to, and the Federal Reserve, obviously, the ECB, the BOJ, and the PBOC, and in Europe, they already started easing, but Japan and China have been waiting. They're waiting for the U.S. because it needs to be somewhat coordinated. Of course, we saw, was it about a month ago, Japan tried to move in advance without the Fed, and that wreaked disaster for the markets. And so they said, okay, hang on, we'll wait for the Fed, we'll wait for the Fed. And so now that the Fed has signaled that they're going to shift, we're expecting rate cuts, coming anytime now. It's 100%. The CME watch group is 100% chance that they're going to lower rates. The question is how far. Now China and the the BOJ can now start easing. So the whole world will start easing in unison, and we'll see that global liquidity start taking off again. So this is all working out sort of to plan. We also know that typically the summer is a bad time for markets. September is historically a bad time for markets. We have a hotly contested election cycle coming up as well. And so I think the volatility we've been seeing is sort of to be expected, but just as planned, the liquidity cycles are about to pick back up. And I think we'll get right back on track.
Are you surprised at all that Bitcoin hasn't hit six figures yet? And then that when it did reach its new all-time high, that we haven't been able to really stay in that range? We fell back down to levels that some people really didn't expect.
No, I'm not. I'm not really surprised. And the reason why I'm not surprised is because I look at the data. Now, if you would have asked me a year ago where I think things would have been, I might have said they should be at 100,000. But if you understand why would Bitcoin get to 100,000? What's the driver of that? And then you look at that instead of just this assumption I had made a year ago, I would say no. So if you asked me a year ago, I would have said yes. But when I look at the data behind it, I would say no, this is where we should be. And just to remind everybody here, again, zoom out. Over the last year, since September of 2023, we're up 130% in 1 year. Like, come on, guys. Like the S&P 500 is doing 8%. Like, get out of your own way here. 130% year over year. What about 2 years? Since September of 2022, we're up 242%. So again, you're going to drive yourself crazy looking at a monthly basis. Year over year, we're doing amazing. No other asset in the world is doing that. But so no, I'm not surprised. Now, again, what is the driver of this? Why does Bitcoin go up? And there's a lot of factors, but a large piece of that is this global liquidity. And so I had expected the liquidity to go up a little bit faster, but it didn't. So what we saw is that global liquidity, which is basically the amount of money in the system, actually started going down. So we saw right now we're breaking new all-time highs, but it ended in 2023 at about 171 trillion, but it hit its low in April. And it basically stayed from April all the way till about July at that low period before it started turning back up. So when you look at Bitcoin, sort of that, the choppiness that we've had and sort of in this range bound, it's been over the last 6 months, which is the same period of time that global liquidity hit that low and has remained in that range. Now it's turning back up. And if we look at past historical cycles, we see that Bitcoin sort of sits on about a 6-month lag. So it needs to gain that energy before that next burst takes off, which puts us right into, early next year. And again, right back on track.
Coin Stories is proudly brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and AI. As a publicly traded leader, Bitdeer boasts a massive 900 megawatts of operational data center capacity and an additional 1.1 gigawatts under development across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Bitdeer's leadership laid the groundwork for the original advancements in Bitcoin mining ASICs. It's really the only company in the industry with the track record and clout to disrupt the market again with groundbreaking new designs for the next generation of mining ASICs. Now, Bitdeer is leveraging years of expertise in data center and cloud management into high-performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. Yeah, I saw one of your recent videos and it piqued my interest because Sam Callahan is actually looking into this data of just how correlated Bitcoin has been to liquidity, to the supply, M2 money supply. And you showed sort of these cycles and these waves, and it has been this indicator. A little bit early, once it starts to tick up, that Bitcoin's going to follow. What does that tell us? I mean, for people, whether they're investors in Bitcoin already or thinking about it, what should we draw from the fact that as liquidity goes up, Bitcoin goes up?
Yeah, well, there's a couple things to keep in mind. So one, I made a video, it hasn't been released yet, but talking about the presidential election cycle and who's going to win who's going to win Kamala or basically Obama, Kamala or Trump, right? And what's going to happen to the markets. And I haven't released this video yet, but basically I showed that it doesn't matter. If we go back through history and look from Clinton, we look at Obama, or Bush, we look at Trump, we look at et cetera. Every president in the first 3 years and 8 months of every single election cycle, the markets, the S&P 500, are up by about 50%. Every single president. Now,
Really?
there's certainly lots of social issues and lots of other issues, but in regards to markets, the first 3 years and 8 months, from January when they take office to September, the first 3 years and 8 months, they're up about 50%. So it doesn't really matter. Why is that? And that's going back to being on a debt-based monetary system that constantly has to expand, and it's the rising amount of liquidity in the system. Now, the thing to understand is that if you look at a lot of people on Twitter lately have been, Bitcoin real estate. And there's a lot of people saying that real estate is in a bubble, and real estate is way bigger of a bubble today than it was in 2008. Well, when you look at it in nominal terms, in US dollar terms, it looks that way. When you look at it adjusted for inflation, which is CPI, it looks that way. But when you adjust it for the rate of debasement or just the even US M2, you'll see we're nowhere even close to where we were in 2008 prices. And so you start to see things differently. And so what you see is when the monetary system expands, true definition of inflation, or the liquidity goes up, it's pushing all these asset prices up because it's not a bubble in real estate or the S&P 500 or Bitcoin. It's a bubble in the denominator. It's a bubble in the amount of money or liquidity in the system.
Right.
Now, the important thing to understand, taking it back to Bitcoin, is that different assets, so the rising tide rises all boats, so to speak, but different boats move at different rates. So what we see is there's different assets that have different sensitivities to the liquidity. So the S&P 500 is sort of like a perfect proxy in US median real estate as well. They move about at the same rate. But if we look at Bitcoin, it's much more sensitive. So it moves at about an 8.95 times sensitivity, whereas gold moves at about a 1.45 time sensitivity, which means for every 10% increase in liquidity, gold would go up
Mm,
by about 14% and Bitcoin would go up by 90%.
mm,
Now, if we look at that, what does that tell us where we're now and where does it tell us about where we're going? Well, luckily, the US government, the CBO, projects where
yep.
that debt will be going. And what we can see is that since 2019, the US monetary base has been expanding by 10% per year.
Right.
And it's scheduled to continue that. I believe it'll accelerate. So if we're going up by 10% a year, Bitcoin's going up at about 90% of that, which is why, again, we're right on track.
Mhm. Yeah, and this is why the volatility is actually a feature, not a bug. All roads lead to the money printer. I agree with you. I think no matter who wins this election, they're just going to have to print. So let me ask you just a little bit more about the election because we had the presidential debate recently. I'm always hoping that someone will bring up Bitcoin. It never happens. I had this hope that maybe Trump would talk about the strategic Bitcoin stockpile. It didn't happen. They actually didn't even cover the economy that much and what their plans were or address the debt. So, do you think that if the election goes one way or another, it could be more of a headwind versus tailwind for Bitcoin, especially because we know how closed off the Biden administration has been to this industry?
100%. When you're looking at projections and you're looking at numbers into the future, um, if the numbers are too far off, it almost seems like the analysis is sort of worthless. But in this regard, because we have such a pivotal moment happening, we sort of look at this. So what I would say is 100%. So we have Kamala, the Biden administration, Kamala administration has been overly aggressive against Bitcoin and just cryptocurrency in general. From
Mhm.
what's happened with Caitlin Lon's bank Custodia, the Fed denying bank charters, all the way down to attacking on and off ramps, et cetera, as well as just taking an aggressive stance to it overall, including, Elizabeth Warren passing all types of bills that could make it even illegal to potentially mine Bitcoin or transfer Bitcoin on a self-custody basis. So very, very aggressive on that level. On the other side, we have, RFK and Trump both sort of taking this pro Bitcoin stance. And now, of course, they've come together in that regard. And so we certainly have this very stark difference. But here's really where it gets really interesting for me anyway, is that, when we think about Bitcoin adoption, we think about game theory. And so who's going to move first? And in the world of
Mhm.
investing, or just in the world, period, it's a competitive world. Business is competitive, but in the world of investing, it's competitive. And so if a fund is outperforming me because they've added gold, well, I should probably add gold. If a fund outperforms me because they've added Bitcoin, I should probably add Bitcoin as well. But what about when a nation adds Bitcoin? And so we saw El Salvador do that. Now, El Salvador is one of the poorest nations in the world, so they're not a big influencer in the world. However, they've done so well with it that now President Bukele has been meeting with other leaders of other nations, small nations, UAE, Omar, things like that. And we've
Mhm.
seen them now starting to take a pro Bitcoin policy, starting to mine Bitcoin, et cetera. But what happens if the United States, with the dollar reserve system, what happens if they move on to a Bitcoin standard? Not a Bitcoin standard necessarily, but let's say put Bitcoin on the reserves, which is what basically Trump and RFK have said they would do. What happens then? Well, game theory
Mhm.
would tell us, competitive world, investment world tells us that every nation will have to respond to that, every single one. And so
Right.
this is why this is a really big outlier. The way that I look at it is, in Trump's first term, he did a lot of what he said he would do. For example, he said that for every one new regulation I put into place, we'll remove three. And actually, if you look at his term, he
Mm.
removed five for every one that he put in. So for he said he'd drain the swamp. I mean, that's a very broad term. We can debate that. But the point is that I believe sort of his word. If he says that he would put Bitcoin on the strategic reserves and he has RFK on his platform and Cynthia Lummis, who's already put the bill forward, I think that
Yeah.
probably has a very high likelihood of going through. Now, right now, the markets are pricing in about a 65% chance of winning from the Electoral College for Trump right now. So he has about a 65% chance of winning. And if he wins, there's probably a 90% chance that he actually does follow through with that and puts it on the reserves. And if he does that, then all the other nations have to move and put Bitcoin on their books. So if that happens, when we look at where Bitcoin could be by next year, I mean, we could be certainly at the top end of that range, maybe in the sounds insane, could be at the $300,000-$400,000 levels. Now, If Kamala wins, on the other hand, then obviously all of that I just talked about is off of the table. But that doesn't mean that Bitcoin dies. But Bitcoin is a global asset. Regardless of what the US does, Bitcoin is going to continue going
Yeah.
up. Bitcoin is there as a relief valve for the money printing. And as we've both laid out already, that's not going to stop. No matter who the president is, that's going to continue. So I think if Kamala wins, we're on the much
Right.
more probably conservative side of the projection, which might be in the $100,000 range by next year, maybe a little higher, 150,000.
Mm.
But if Trump wins, I think we could be at the top end of that range, which again would be, somewhere in that $400,000 range.
Wow, it's so crazy to think about those two very divergent paths. And obviously, we can hope that Bitcoin's going to do very well in the near term. But I can totally understand why some people have felt very bearish in the short run, wondering where it's going to go. And some analysts that I've had on my show, or I follow on Twitter, some of them are predicting a massive crash where Bitcoin actually tanks, everything across the board goes down. We've already seen things like real estate decline in prices in various states. Are you one of the people that are predicting a crash then money printer, or sort of this like choppy sideways as they start to increase liquidity and coordinate with the central banks around the world?
So I'm not one of the doomers predicting a crash. As a matter of fact, I've been the opposite. So back to global liquidity. If you look back to October of 2022, I put a video on my channel, said there is no market crash coming, and here's why. In January, I made another video, said that there's no crash coming. I said, here's the Fed's pivoting. Here's the data. I made another video that said it's time to buy. I'm buying now. In August of 2023, I made a video that the bear market's been canceled. And I've been making videos saying that what we're really expecting, or what I'm expecting, is a crash. I'm expecting a massive crash, and I'm expecting a really, really bad crash. But it's a much different crash than most people expect. You see, a crash, if you think about a crash, what's everybody afraid of? A recession, a market crash. What does that mean? Well, if things crash, let's say what most people think, my retirement portfolio drops, my real estate, my home
Mm-hmm.
drops, I lose my job, I get a lower paying job, my business doesn't do as well, I don't make as much money. That's what most people think of.
Mm-hmm.
But what does that mean? What all that means is that the quality of my life would go down. The standard of my living goes
Mm-hmm.
down. I don't have as much money. So I have to now eat hamburger meat instead of steak. So really what they're saying is a crash means my standard of living goes down. But you see, prices don't have to drop for that to happen. Prices could go up so fast that my pay doesn't keep up and my standard of living also goes down. So it's a
Mm.
reverse crash. And while everybody's expecting a deflationary crash, I'm expecting an inflationary crash. Now, the results are the same. We both have a standard of living that's been reduced. However, I think a reverse crash, an inflationary crash, is actually much worse. And the reason why it's much worse is because on a deflationary crash, at least the market's reset and people
Mm.
get a chance to get back in, right? My
Yeah.
kids could eventually buy a house. But in an inflationary crash, you never get another chance. It's just too late. And so I
Yeah.
think that's where we're going. Now, will there be crashes? I mean, what is your definition of that? Of course, there's going to be massive volatility along the way, but I
Yeah.
don't expect any long sustained depression. Maybe we see some sort of flash crashes, sort of like we saw in 2020, that probably last half the time, something like that, not tradable events, because it's going to be volatile along the way. I mean, if you look at the chart of the Weimar inflation, hyperinflation, and
Mm.
I'm sure you've seen it, right, with the red lines overlaid, the volatility was insane. And so we'll have
Yeah.
that, but I'm expecting the crash up.
It's time for a quick break to hear these messages from my partners who make this podcast possible. First up, Casa. It is so easy to set up your Bitcoin 3-key self-custody with Casa that I can show you pretty much the whole process in just 30 seconds. You're watching it right now. I recently switched to Casa for multi-sig collaborative custody and inheritance planning because of their enhanced non-KYC required privacy and the ease of this mobile app. Make sure to watch the tutorials and get your Casa plan for 10% off at casa.io/Natalie. Next up, Speed Bitcoin Lightning Wallet, one of the fastest growing wallets out there. Speed is a secure, low cost way to send or receive Bitcoin instantly. It's super simple and scores high user ratings. You can even use it to shop gift cards of your favorite brands and earn rewards. Download Speed using the QR code on the screen or the link in my show notes and use promo code CoinStories10 to get 5,000 free sats. Next up, Coinkite. Coinkite makes everything you need to safely self-custody your Bitcoin. including the Cold Card wallet. That's the cold storage device I use for safekeeping my Bitcoin. You can verify the source code, it's ultra secure, and it's easy to use even if you're a beginner. Head to their site in my show notes and get a 5% discount with promo code CoinStories. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is a professional Bitcoin IT and security team offering personalized one-on-one support that guides you through cold storage, setting up nodes, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer Bill's.
Give the Bitcoin Way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your 30-minute free consultation today. All right, back to the show. That's really interesting. I haven't heard that concept before, but you're right. I mean, thinking about how they're going to have to print in order to sustain the debt and keep everything liquid, I figured that yeah, real estate prices, asset prices, they're just going to continue to go up. Even if they temporarily maybe crash in the short run, they have to go up over the long run. That'll be great for Bitcoin. But if you're trying to buy a house, it's not like it's going to be this situation that we had in 08, 09, where suddenly real estate is cut like in half and you could finally get your house. It feels very, very different this time around. And you've been in
and
more cycles.
Let's talk about that for a second, just for everybody listening. So you mentioned that there are some markets where real estate has gone down, but on a U.S. national median basis, real estate is not down; it's up,
Right.
and that's because, as I made the case, it's a perfect proxy for this inflation. So the U.S. has been increasing M2 by about 10% since 2019, and they're scheduled to continue to do that. So in 5 years from now, where is real estate? It's up 50%. It's up 50%. Now, not every single house, if you have to understand there's no such thing as a real estate market. There's thousands of markets. So even take Miami.
Yeah.
Miami's up 8% year over year. But there's condos in Miami that are down 50%. But wait, you said Miami was up. Yes, as a whole, but that doesn't mean that some condos along the water that were overbuilt aren't still down 50%. In Austin, it was the best performing market for 20 years. Overall, it's down about 20%, Austin right now, but there's still some areas of Austin that are way up. And so you have to understand it's very pocketed, but I think overall, it's going to be moving up at the rate of inflation. We know that's going to be at least 10% per year, and that puts assets up at least 50% in 5 years from now. And I think people need to be prepared for that and taking action today for that.
Yeah. You know, you've been in more cycles than I have. You've seen more bull runs. I'm still pretty new, and that bull run that we experienced when I really launched this podcast, like 2021, that was unlike anything I've ever experienced, with just how much attention was on this space, Bitcoin, everyone wanting the content, everyone thinking that it's going to 100 and 150,000. And it's been so long since that feeling has been in the industry and in the community that I wonder if future cycles will be different, or if the attention has kind of permanently moved away. Can I get your take on that, since you have seen multiple bull runs and you've been producing content in the space? Like, eventually, do people all of a sudden turn around and say, oh my God, the price is up. Now it's at 6 figures. I have to dive in. I have to learn about it, because it just feels like there's this big lull and everyone's either paying attention to the election and politics or AI and other tech sectors.
That's a great question, Natalie. So you're right. I have been through a bunch of cycles in Bitcoin, but I've also been in a bunch of cycles. So I started my career buying real estate in Southern California at the bottom of a big crash. So from 89 to 92, the markets had crashed. I started buying real estate in 1995. So at the bottom of that crash. And then I was investing in internet stocks. So my roommate had quit his job. We were day trading these things called internet stocks. We were talking about these weird names that nobody knew anything about in 98, 99. And the reason why I bring that part up, and then obviously the .com crash, but the reason why I bring that part up, Natalie, is because we were trading these things called internet stocks. And people thought we were crazy talking about these internet stocks. But today there's no such thing as internet stocks. They're just companies. And the reason why I bring that up is because we'll come fast forward. So now I started looking at Bitcoin at around 2013 when the price started running up, and I was going to buy. I'm like, oh my gosh, I don't know what this thing is, but it's going up. Then it spectacularly crashed. I didn't buy it. I started buying in 2015 around $300, and I saw it run from 2015 to 2017, got up to $20,000. And I was writing a cryptocurrency newsletter. Every once in a while, someone on Twitter wants to call me out. Oh, look, this guy used to be crypto. Yeah, I talk about it all the time. I wrote a crypto newsletter, and I personally turned, I personally turned about 100 grand into over $5 million in that time period. Um, and we
Wow.
made some amazing calls. But the reason why I say that is because then 2018 happened and the market crashed, and then 2019, and it seemed to drag on forever. And I did get to the point, Natalie, where I'm like, this will probably never can't come back. Why didn't I sell? I'm such an idiot. I should have sold. It's never coming back. That pit of despair. You've all seen that like Wall Street psychology
Yeah.
thing. The pit of despair was like, it's never coming back. What's going to happen? But it did. And every time it crashes, we start asking ourselves if it's ever going to come back. And it does every time. Now, back to the second part of the question that you asked is, will people eventually get much more interested in it? And the reason why I gave you the story about the internet is because I think as it's making more mainstream adoption, as it's making more mainstream headlines, as BlackRock has now added to their ETF and Larry Fink's talking about it on TV, I think it disappears into the social construct, and it's not this new crazy thing that people don't know about anymore. So I would think that just like internet stocks are basically gone today, I think cryptocurrency will be gone as well. And Bitcoin will just sort of fade into the mainstream, and it won't be all these people wanting to know what it is. Most people already know what it is at this point. So to your point, one, yes, the cycles tell us that it will come back. We always believe it won't, but it will. But number two, I think collectively people will probably, be more interested in other subjects, or maybe more interested about how Bitcoin changes other things. So I've often said,
Yeah.
so I'm a partner in the Bitcoin Opportunity Fund. So we're investing into companies that are building on and around the Bitcoin ecosystem. And I say, we don't need more Bitcoin products. We need Bitcoin in more products.
Yeah.
It needs to go in. And so back to the content, I think the same way. We don't need more Bitcoin content. We need Bitcoin to find its way through all the content where it just sort of now fits into the culture, fits into society. So I think that's how it's going to change. I think it
I
already
like that.
is.
Yeah, I like that. The idea that Bitcoin's going to integrate into everything so much that you don't really talk about it as its own individual thing. Um, well, that actually makes me think of one of my final questions for you, which is just the question of what Bitcoin will be in 5 to 10 years with the opposing forces of, control and governments wanting to surveil and monitor and extract as many resources and extract the taxes as much as they can. What do you think Bitcoin will be? Because there are so many people who want to see it as freedom money, as a truly peer-to-peer network, as a digital cash. There are others that seem to be okay with it being more of that store of value that is within the framework of all the other stores of value and equities and gold and all of that. How do you see this playing out? Do you think that we'll be able to freely transact, or we're going to have to go through these gatekeepers that are all regulated and essentially monitor what you're doing?
No, I don't think there's going to be the gatekeepers that are going to moderate. Now, obviously, country by country, region by region, those things can change. I mean, the United States could pass some bill where they say we'll kill you on sight if we catch you. I mean, that could theoretically happen. It's what we call a possibility, but not a probability. There's really not a probable chance that would happen. It's possible, sure. I don't think that the U.S. would take that stance as of right now. I think the U.S. we've entrenched ourselves. The Bitcoiners have entrenched themselves into the system too much at this point. Meaning, there's several dozen high-ranking members of government, congressmen, senators, et cetera, that are Bitcoiners. Patrick McHenry, who led the Financial Services Committee, hangs the Bitcoin white paper in his office. We have, senators like Lummis putting bills in place. States have been putting into their state constitutions guaranteed rights for it. So I think it's just way too entrenched in that standpoint. But also, the laws aren't really made by our lawmakers, the people we elect to go make laws. The laws are really made by the lobby groups, and then they're given to lawmakers just to co-sign, right? And so the lobby groups, if you think about who they are, pharmaceutical probably at the top, but the Financial Services Committee is pretty high up there. And when you look at BlackRock and Fidelity and these financial institutions who have spent probably billions of dollars to build Bitcoin products, I don't think they're going to be real happy if the government tries to make them illegal. So I think we have them on our side as well. Now, I think kind of the question you asked, could they say, well, you can buy it through an ETF, but you can't really own it. You can't self-custody it. Well, as I said, some states have already enshrined that rights in their constitution. So that's going to be a battle. But ultimately, I think it fails because how's that worked with drugs? And drugs are physical. Drugs have to be grown, cultivated, packaged, shipped, processed, smuggled, and then distributed. And when they tell us not to do drugs, it doesn't make us want to do drugs, right? It doesn't incentivize us to do that. But how do they stop something completely digital? Obviously, they can't. But when they tell us that we can't store our wealth or transact in a way that we can't, or that they can't steal from us, it sort of makes us want to do that. Like gun sales go through the roof when they talk about banning guns or cracking down on guns. But then we have to think globally. So even if the U.S. were to do that against everything I've said, I mean, what about the rest of the world? And then I would say on top of that, so that being said, I want to make the statement that governments can't stop it. I don't think the U.S. can stop it. I don't think even if the U.S. did, the other nations can't stop it. But I do want to throw this out there because this is going to change it a little bit. We're talking about, in the question you asked me, would we be using it for spending? Could they take that away from us? In 5 years, would we be using it as a medium of exchange, right? And I think the answer is no, Natalie. And the reason why is Gresham's law, or the reverse of Gresham's law, which basically means that bad money drives out good. Or good money drives out bad, right? The reverse of that. And so let me just give you a practical example of that. Maybe a lot of your listeners already know this, but pre-1965 quarters and dimes were pure silver. Mm-hmm. In 1965, they took the silver away, and now they're basically junk metals. Now, a 1964 quarter will still get you about a gallon. It was a gallon of gas back then, and today it's still a gallon of gas. It's worth about $3. But the point I have is that you will not find anybody using a pre-65 dime or quarter. Why? No one's going to spend that. Why would you spend it? So they take those dimes out of circulation and they spend the post-65 quarters and dimes. Mm-hmm. No one's spending those dimes, right? And so that is the thing that we have going on. As of right now, the dollar is an amazing payment network, if I think of it that way. And so we'll continue to use it, and we're going to continue to hold Bitcoin. Now, there's also the tax implications. That's another topic that we could bring up in the United States. Doesn't pertain to the rest of the world necessarily. But I think until we get to a tipping point, which I don't think is in 5 years, it's probably further out, we're going to continue to use the bad money, the post-65 quarters. We're going to continue to hoard the good money, the pre-65 quarters, and that's the Bitcoin.
That's a good analogy. That's an interesting way of putting it. I think it does differ depending on where you are, because sometimes Bitcoin is, I mean, it's different than the dollars, and you're going to want to maybe spend your Bitcoin, and I don't know. I think it depends a little bit about where you are.
It certainly brings up a good point, Natalie, and this is actually a very good point. I'm glad you brought it up. So there are things that Bitcoin can do that nothing else can do. Mm-hmm. So, for example, Bitcoin can do micropayments. Right? Yeah. You can't send 35 cents on the internet anywhere in the world. So Bitcoin can do that. So in those instances where we need to do micropayments, which is going to be massive with AI, we didn't even get a chance to get into that. But Bitcoin is personless, meaning you don't have to be a person to get a bank account. And so now with the rise of AI and robots, they could have their own Bitcoin accounts and they could do micropayments. And so Bitcoin will start moving into that range. It'll do what dollars can't do. So micropayments, number one. Number two, heavy authoritarian regimes that have heavy censorship, North Korea, Afghanistan, in Canada with the trucker rally, in times where the government's trying to crack down on censorship of payments, then Bitcoin can be used as well. So Bitcoin will certainly get adoption in those areas where it can do things that the traditional payment system can't do. Unfortunately, I'm not happy about this, but unfortunately, I believe that governments get more authoritarian in the near future than less. And so there will be an increased demand. And I typically think of the demand drivers for Bitcoin being two things. One, will governments print more or less money in the future?
Right.
More. And number two, will governments become more authoritarian in the future? And I think both of those are main drivers. And so Bitcoin will be used in those areas where we can't use traditional fiat currency. And that's why I said it will happen. I just think it's further out than 5 years.
Great points. All right. Well, I know we're short on time. I could talk to you for an hour, but anything you want to leave the audience with, any final thoughts?
Boy, I would just say that I think, again, as we started out, just saying zoom out. And ultimately what I want to say, we didn't really get a chance to get into this, but I have a free ebook on my website, and it's just how to retire off Bitcoin tax-free. And I frame up what's called the money game, the game of money. And in the game of money, people have to understand this. And I start off with a quote saying, when people ask me at what price will I sell my Bitcoin, I look at them and just say, you have no idea what game we're playing. Yeah. And the reason why I just want to end with this is because of the zoom out thesis, right? Mm-hmm. So the goal in the game of money, which is certainly not our highest calling in life, but in the game of building wealth, is to earn in fiat currency and buy assets. And those assets should be building month after month. And my goal should be to die with more assets than I was born with, than I have now. And so I want to earn in fiat and buy assets and hold those assets forever. The goal is not to sell assets for fiat. And when you start to think about it in those terms, it helps you zoom out. Like, I don't care what the price of Bitcoin is going to be in a week or a month or in 6 months from now, because my goal is to hold it forever, as Sailor would say, right? Forever.
Yeah.
And so I think you have to think of it in those terms. We want to be always be earning in fiat, saving in an asset like Bitcoin, and it's forever. And it's long term. And I think if people take that viewpoint, I think they're going to be much more calm. They'll sleep better at night, and they're going to be much more successful than most people.
I love it. You've already made me feel more bullish because I've been feeling the bearishness in this whole market. So, Mark Moss, thank you so much. I'm going to have all of his info in the show notes. Make sure to check out his book, UnCommunist Manifesto, his show on YouTube. I watch the videos. They're fantastic. So, Mark, hope to see you again soon. Thanks.
Thanks, Natalie.
Thank you so much for checking out this episode of Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open. If you want to share feedback or guest suggestions, just reach out at natalie@talkingbitcoin.com. Make sure you're subscribed to the show and check out my free newsletter, nataliebrunel.substack.com. I'll see you next time.